Welcome to the locker room. Today, I'm putting on the coach's hat, and you're the rookie, gearing up for the big leagues. If you're dead set on securing prop firm funding, you are exactly where you need to be. This explainer is your ultimate playbook for dominating the 2026 FTMO challenge. FTMO is the absolute gold standard in this industry, and knowing their rules inside and out, that's what separates the players who get funded from the ones who get left on the sidelines. Let's get right into it. So here is our 5-step game plan. We're going to cover the evaluation game plan, mastering those core rules, preventing major violations, conquering phase 2 psychology, and finally, scaling up for long-term income. All right, section 1, the evaluation game plan. Look, before you can win the game, you've got to understand the roadmap of what you're actually signing up for, right? You don't just walk in off the street and get handed capital. It all starts with phase 1, the evaluation phase. Now, for a $100,000 account, this comes with a $540 entry fee. If you pass that, you advance to phase 2, which is verification. Pass that, and you reach the ultimate goal, a fully funded account. Okay, let's break down your core stats for phase 1. You've got a 10% profit target, so on a $100,000 account, you're aiming for $10,000 in profit. You also have a maximum drawdown of 10%, which gives you a hard floor at $90,000. Your daily loss limit sits at 5%, and you need a minimum of 4 trading days. But here is the absolute best part. The time limit is unlimited. Back in 2026, FTMO completely removed the time limit. They literally took the clock right out of the game. This gives you massive flexibility to just sit back and wait for those picture-perfect setups. Moving on to Section 2, Mastering FTMO Core Rules. Now it's time to tackle the math that sidelines 90% of rookies before they even know what hit them. First up is the concept of static drawdown. Guys, this is a massive advantage. Static just means your 10% loss limit is fixed entirely to your starting balance, and it never, ever trails your equity upward. Here's why that's crucial. If you have a $100,000 starting balance, your absolute floor is $90,000. If you go on an epic winning streak and grow your account up to $112,000, your floor does not move. It stays exactly at $90,000. That gives you $22,000 of pure breathing room. It's an incredibly forgiving rule, especially when you're just starting out. Next up is the daily loss limit. Honestly, this is probably the most misunderstood rule in the entire playbook. FTMO calculates your 5% daily limit based on whatever is lower, your starting balance or your current balance at the start of the day. It's a brilliant bit of asymmetric math. For example, on day 1, both balances are exactly $100,000, so your limit is a clean $5,000. Easy, right? But let's jump forward to day 8. Let's say you've taken some hits, and your current balance is down to $97,000. Because FTMO uses the lower number, your 5% limit is now calculated based on that $97,000. That gives you a daily loss limit of $4,850, not $5,000. Basically, your daily limit shrinks when you're in a drawdown. It's built-in protection to keep you from totally blowing out your overall account. Then we have the minimum days rule. You need at least 4 trading days to pass, but hey, they don't need to be consecutive. You could trade on a Monday, take 2 weeks off, and then trade again. Opening any single position counts as a trading day. But listen to me carefully here, coach to player. Do not commit a foul by trying to game the system. If you just open and close a trade in 4 seconds, simply to tally up a day, FTMO's system is absolutely going to flag you. Just play the game legitimately. All right, Section 3, Preventing 3 Major Violations. Now we're pivoting from the basic rules to pure, unadulterated defense. These next 3 common violations, they are massive penalties, and we need to avoid them at all costs. Violation number 1 is the revenge trading daily loss breach. This is just a vicious psychological spiral. Imagine a trader loses $1,000. Instead of stepping back and taking a breath, they feel the pressure. They force a bad trade, lose another $1,000, start to panic, increase their lot size, and suddenly, boom, they blow right past their $5,000 daily limit. Account closed, game over. To stop this from happening to you, I'm handing you your first prevention protocol. Think of this as your ultimate defensive maneuver. Step 1, you have to acknowledge any loss that exceeds 1% of your account. Step 2, stop trading immediately. And Step 3, walk away from your screens for a mandatory 30 minutes. Seriously, the urge to revenge trade is incredibly strong in those first 10 minutes. You have to let the clock cool you down. Violation number 2 is the silent max drawdown breach. This sneaky one happens when hidden swap fees and, frankly, sloppy math cause a trader to accidentally breach that $90,000 floor we talked about. They might think they have a $2,000 buffer, but because they completely forgot to account for overnight fees, they take a loss and silently slip right past the red line without even realizing it. So here is your equity tracking protocol, and as your coach, I demand you adopt this starting today. You are going to write your current balance on a physical notepad right next to your monitor, and you are going to update that number manually after every single trade. You must always calculate your exact distance to that $90,000 floor. I'm not kidding, that physical piece of paper is now the single most important tool on your desk. Violation number 3 is the news event trap. Listen, FTMO strictly prohibits holding positions during high-impact news events. Think NFP employment reports or FOMC interest rate decisions. If you hold a trade 2 minutes before or 2 minutes after these scheduled events, it is an instant red card. And yes, you will be penalized even if that trade was actually profitable. To survive these super volatile pre-game news windows, you need a solid system. Here is your alarm-based checklist. 1. Check Forex Factory every single morning. 2. Set alarms on your phone for 10 minutes and 5 minutes prior to any high-impact news. 3. When that 5-minute alarm rings, you close all positions entirely, no exceptions. And 4. To avoid any weekend penalties, make sure to close all weekend holds by 2100 GMT on Friday. In this game, discipline is your ultimate shield. Okay, moving to Section 4. Conquer Phase 2 Psychology. Now that we've got our defense locked in, we're shifting our focus to the mental fortitude you're going to need for the fourth quarter. Phase 2, verification. Mathematically speaking, Phase 2 actually gets 50% easier. Your profit target drops from 10% down to just 5%. Sounds great, right? But psychologically, man, it is so much harder. See, in Phase 1, you're really just proving your strategy works. But in Phase 2, there's this immense, crushing pressure not to mess up and have to restart. You've already paid the fee, you've already passed the first hurdle. The fear of failing right at the finish line and starting all over again, it can literally paralyze you. Because of that, I am giving you the absolute golden rule of Phase 2. Do not change anything. I mean it. Phase 2 is not the time to suddenly invent a brand new strategy. It is literally just the statistical verification of what you already did in Phase 1. Use the exact same risk per trade, the exact same setup criteria, and the exact same shutdown rules. Do not change anything. And finally, Section 5, Scale for Long-Term Income. It is time to talk about the ultimate trophy. Let's walk through the timeline of achieving a true zero net cost victory. Once you finally have that funded account, you need a minimum of 5 trading days. After 14 days, you hit your very first payout eligibility window. And on that glorious first payout day, something magical happens. You receive your profit split, plus your initial $540 entry fee is completely refunded to you. Boom! Your net cost for the entire challenge just dropped to absolute zero. But getting funded, that's just the beginning. As your coach, I want you to build a dynasty here. FTMO offers a periodic 25% account scaling plan to help you do just that. To qualify, you need 4 months of active trading in the funded account. You have to generate a 10% cumulative profit. And of course, you must maintain strict rule compliance the whole time. If you do all that, your reward is massive. They boost your entire account size by 25%. This is exactly why scaling is the ultimate goal. Let's think about monthly income, assuming a really consistent 3% profit and an 80% payout split. On a base $100,000 account, you'd be making $1,920 a month. Not bad. But what happens after you scale up to a $156,000 account? That exact same 3% performance now yields $2,995. You are literally making a 56% higher income for the exact same amount of trading effort. That is the incredible power of compounding capital. So I'm going to leave you with this final question. You now have the playbook, you have the defensive protocols, and you have the vision for scaling. But do you have the discipline to actually execute it when the screens are flashing red, the clock is completely out of the game, and your financial dynasty is now entirely in your hands? Thanks for joining me for this explainer. Now get out there, stay strictly disciplined, and absolutely dominate your first challenge.